A Random Walk Down Wall Street, by Burton Malkiel is a classic investment book that explores the principles of investing and challenges traditional investment strategies. Here is an overview of the book's chapters. Chapter 1. Firm Foundations and Castles in the Air. Malkiel introduces the concept of a random walk in the stock market, emphasizing that stock prices are unpredictable in the short term. He discusses the efficient market hypothesis and the idea that stock prices reflect all available information. Chapter 2. The Madness of Crowds. This chapter explores the impact of investor psychology and market bubbles. Malkiel discusses the historical examples of speculative manias and irrational investor behavior. Chapter 3. Stock Valuation from the 60s through the 90s. Malkiel examines various stock valuation models, including the price-earnings ratio and dividend discount models. He analyzes their effectiveness in predicting stock prices and provides insights into the challenges of valuation. Chapter 4. How the Pros Play the Biggest Game in Town. This chapter delves into the world of professional money managers and examines their strategies. Malkiel discusses the active versus passive investing debate and provides evidence suggesting that active fund managers often fail to outperform the market consistently. Chapter 5. The Firm Foundation Theory of Investment. Malkiel introduces the concept of fundamental analysis, which involves evaluating a company's financial statements and economic factors to determine its intrinsic value. He examines the strengths and weaknesses of this approach. Chapter 6. Technical and Charting Analysis. This chapter explores technical analysis, which involves studying historical stock price patterns and trends to predict future price movements. Malkiel critically evaluates the effectiveness of technical analysis and highlights its limitations. Chapter 7. How to Buy Funds. Malkiel discusses different types of investment funds, such as mutual funds and exchange-traded funds, ETFs. He provides guidance on selecting funds, diversification, and minimizing costs. Chapter 8. Behavioral Finance and the Psychology of Investing. This chapter explores the field of behavioral finance, which studies how human psychology and emotions impact investment decisions. Malkiel discusses common cognitive biases and offers insights into overcoming them. Chapter 9. A Practical Guide for Random Walkers and Other Investors. Malkiel provides practical advice for individual investors. He emphasizes the importance of asset allocation, diversification, and adopting a long-term perspective. He also discusses retirement planning, taxes, and other practical considerations. Chapter 10. A Random Walk Down Wall Street Today. The final chapter updates the book's content and discusses recent developments in the financial markets, such as the rise of index funds, the impact of technology, and the implications of behavioral finance. Throughout the book, Malkiel challenges the idea that individual investors can consistently outperform the market and advocates for a passive, low-cost investment approach such as index fund investing. He encourages investors to focus on broad diversification, asset allocation, and a disciplined approach to achieve their long-term financial goals.